Sorry for that. Good afternoon, everyone. Welcome to the Insurance Focus webinar series. So, this webinar is focusing on Takaful insurance, and Takaful is not just an alternative to insurance. It represents a shift towards ethical, inclusive, community-driven risk protection. So today, we explore how that vision can scale across Africa and beyond, especially looking at Uganda, since we are new in this market. Okay, Mr. Gobi has joined. My name is Mufuma Paul. I am deeply honored and delighted to serve as your host for today's incredible, timely, and essential session, which focuses on the growth and future of Takaful in Africa. We'll have lessons from Ethiopia, since it has been a developed market for some time. Then we'll explore opportunities in Uganda as a baby in this. And then we'll have a global outlook on Takaful, especially Micro-Takaful. So Takaful, still the Sharia compliant form of insurance, and this is rapidly gaining significant relevance across Africa. That's why we even merged Uganda to gain the first Takaful company. It appeals and extends far beyond its religious alternative. It is increasingly recognized as a robust model for ethical, socially responsible finance, a concept that resonates deeply with the global push to sustainable development goals. Therefore, after bringing to you what Takaful is all about, I could like to introduce to you the different panelists that we have. We have Mr. Mike J. McCold, MD, Microinsurance Center in Melanima. We have Kamel Gobi, Manager, Takaful Operations at the Ethiopian Insurance Corporation. We have Dr. Yusuf J. Katelega, who is a consultant and economist. Therefore, I open this webinar for them to introduce deeply about themselves, and we get to know them better. Then from that, we'll proceed with the webinar. Thank you. Let's start with Mr. Michael J. McCall.
Greetings, everybody. It's great to be here with you. I'm Michael McCord. I run the Micro-Insurance Center at Milliman. Milliman is the largest actuarial consulting firm in the world, although our work is focused on microinsurance and the whole range of microinsurance. I've been involved in some way in Takaful for over 20 years now. Not extensive, but off and on and here and there. And so I think I bring a nice perspective to this discussion. Yeah, that'll be enough for now, I guess. Thank you, Paul.
Mike, we are losing a bit.
I stopped talking. Sorry. I thought that was enough. I can say more. I can go on all day. So, but I thought that would be enough for a start.
Okay, thank you so much. Let's
Good afternoon. Paul, can you hear me?
Yes.
Good afternoon, Paul.
Good afternoon,
And
Doctor.
good afternoon, Michael. I'm called Yusuf Katerega, and I'm really happy to be here. Michael, specifically, I'm happy to see you for the first time. I've used your work so much, and I used your works a lot when I was doing my PhD in Dar es Salaam. Some things just happened, and I was like, okay, is this the Michael? It's really nice sharing this space with you. And thanks for the good work, especially when it comes to writing.
Thank you, Yusuf.
Okay. Still going to be nice to see you. Ethiopians are my very good friends, and I really have quite a number of friends in Ethiopia, especially in the realm of insurance. Now, currently, I'm working with Makerere University as my main employer, and I'm a lecturer there. And I'm also involved in some bit of administrative work. I'm heading a department called Marketing and Management Department. And at the same time, I work with the Insurance Training College as their consultant. And I really have a zeal for insurance. Actually, insurance is what I do. Insurance is what I write about, and insurance is what I teach. And I've chosen to write, to research, and to do everything of mine in this realm, specifically in insurance. And Takaful is part of what I do on a daily basis. And it's really nice to be here. Thank you, Bob.
You're welcome, Doctor. Let's invite Mr. Gobi for his introduction as well.
Hello, can you hear me?
Yes.
Yes, we can hear you, sir.
Thank you very much for just to be with you today. I'm Kamal. Maybe my
Paul, I can't hear Gobi.
Mr. Gobi, are you there? I think Mr. Gobi has got some challenges with the network. Okay, we can hear you.
hello.
Hello. Okay. As Mr. Gobi stabilizes his network, let's
Online. Hello.
we are getting you, Mr. Gobi.
Hello. Just now. Can I continue now?
Yes, please.
Okay. My name is Kamal Gobe. Yes, I'm from Ethiopian Insurance Corporation. I have been working for AIC for the last 16 years. Professionally, I'm an economist, and also I do have the master's in human resource development, and I'm working as a manager of Takaful Insurance project for the last 3.5 years. Now the project is started to implement. It is now implemented, and in Ethiopia, Takaful Insurance is at the infant stage. As EIC recently get approval from National Bank of Ethiopia in December 2025. Now we are implementing this product as a Takaful window operations. Now we are working on it, and as a project manager now, still we are doing on the implementation of the Takaful insurance in EIC. So I will share my experience in of Takaful as well as my stay in Ethiopian Insurance Corporation for the last 16 years. This is all about me. Thank you, Mr. Moderator. I will come back to the points that I will present for you.
Okay, thank you, gentlemen, for those insightful introductions. Your diverse backgrounds perfectly set for this stage. For our conversation, let's not waste any time and begin by laying a solid foundation for our audience. And I would like to appreciate Mr. Michael, Dr. Yusuf, and Mr. Kobe for the short notice. And you've managed to be here. It's a pleasure. Now, first of all, we have the objectives for this webinar. We want to understand the practical and structural difference between Takaful and conversion insurance, gain market insights from Ethiopia, identify challenges and opportunities, necessary adoptions in Uganda. Then we also look at the best practices, especially Micro-Takaful, that we can adopt Uganda, Ethiopia, and the rest of Africa. Then I'll start with something general from your respective markets. How could you describe the current state of Takaful penetration, regulation, and consumer segments from Ethiopia, Uganda, and then the global aspects? Let's start with Dr. Yusuf.
Thank you, Paul. As we speak, if I'm to use a simple word, I could say that when it comes to preparations for Takaful in Uganda, we were in position to get the first Takaful company in Uganda, and they got their license, I think that was late November. And as we speak now, They have their first ever products being rolled out on the market. There is a particular company which came in from, I think, Djibouti. And people are excited. That's what I can say. When you have to talk to a number of people who are really waiting for this kind of ethical finance, you can see excitement amongst the population in regard to opening of the first ever Takaful insurance company in Uganda. Now, this comes in two ways. First of all, I wouldn't, and I can't guarantee it. However, the reason I say that is simply because as we speak now, insurance penetration in Uganda is extremely still very low, at less than 1% of the population. And when you talk about the premiums themselves, they are still stuck at less than 1% of the GDP. So what does this point to? Despite the fact that there are some few people who've been waiting for this, the fact still goes back to issues relating to insurance literacy. Very few Ugandans as we speak, they are insurance literate. And how they would benefit in case they got that policy. However, all is not lost. In most cases, I prefer to always applaud two people in this. I applaud the regulator because this one has taken the necessary steps to make sure that the guidelines are in place and is doing all it can to make sure that there is an enabling environment for that. And also there is the insurance training college and other institutions which are making sure that at least they throw the information out there in terms of awareness, in terms of educating the masses about what it takes. But to be particular with Takaful, one thing I can tell is that when customers get to know about this and then the benefits and the workings, definitely a good number of them will enroll. However, the blueprint for the Ugandan market points to a success for any person who really hopes to come through and starts any form of insurance here, be it conventional or be it Takaful. So that's what I can say briefly in regard to the current Ugandan market and Takaful. Thank you.
Welcome. Mr. Gobi, let's have your view about how you describe the current state of Takaful penetration in your region or country.
Okay, thank you very much. Indeed, it's very similar with Uganda. There's a population more than 120 million. There is less penetration of insurance market here. We do have around 90 insurers in the country. From these, now only 10 of them have started the Takaful window operations. And thus, still now there is a low awareness of even the general or the conventional insurance too. It's similar with that issues, that challenges also there is in Takaful as well. So when we see it is current development of Takaful, it's a recent phenomenon in Ethiopia. It has been started before 5 years, and now it is expanding to other insurance too. We do have only one reinsurance or a Takaful institution in the country. We don't have colleges or universities which focus on the insurance education. So the level of knowledge, the know-how is relatively low in the country. most of the certificates and insurance knowledge is imported from different overseas institutions that we don't have in the country. So overall, the insurance penetration is very low. It is very insignificant to the contribution of the GDP in general. When we see in relation with this, we do have 32 banks, commercial banks, and from these, four of them is interest-free banking services. These are also recent phenomena, and also micro finances as well. So now all are these institutions are very emerging. It's not as such developed as the point where they are deserved. When we see the
Okay.
population, more than we can say half of the population is Muslim. But in relation with this, we don't have expansion of financial or Islamic institutions in the country. This is the point that I can add on this issue. Thank you, Mr.
Okay, thank you,
Umar.
Mr. Gobi. Now, Michael, you've been to different markets that are doing Takaful. You've been to Malaysia, based on our interactions, you've been to a lot of markets that are doing Takaful, and give us the global current state and those different markets where have been, how Takaful penetration, regulation, and consumer sentiment has been or is right now.
Thank you, Paul. Yusuf, Gubi, thank you. Thank you for your wisdom. And I appreciate the opportunity to be here and speak with all of you. I'm a great fan of Takaful, of ethical insurance. I've spoken twice at the Africa Takaful conference in Lagos. I do a lot of promotion. I work a lot in Pakistan and Egypt and lots of other countries that should have lots of Takaful. And I remember about 20 years ago, I was in Indonesia, and I was talking to the chief executive of AIG, one of the major insurance companies, major multinationals. And I said to him, I said, you know, insurance is done okay here, but I said, what's needed is to have Takaful, to have Islamic responsive insurance.
Okay.
And I said to him, once you have that, the market is going to completely shift to Takaful. And that's what people are going to want. And that makes so much sense. And obviously, based on what we've just heard and what we've seen and across the globe pretty much, I was wrong. And I don't like to say that very much, but it's true. I was wrong. And, you know, you've got cases, you know, Egypt, we do a lot of work. And Egypt, you actually have companies that are de-Takafulizing. So they're moving from a Takaful structure to a commercial structure. It's not been the panacea that I expected. And, you know, it's a number of things, you know, obviously the question is why? Why didn't that happen? Because I still believe it should. And what's happened? And what's happened with Takaful is similar to what's happened to microinsurance. We haven't done well enough at making sure that we understand what clients want and that they're getting value from products. Just because it's Takaful doesn't mean they don't have to get value. And I apologize, Yusuf. You said that that there's a lack of insurance literacy in these countries, and I would respectfully disagree. And I would say, especially when we talk about these two countries, right, Uganda and Ethiopia, Ethiopia has a tradition of insurance, almost even more so takaful than insurance. You look at the Muna Mukabis in Uganda. Who doesn't belong to a Muna Mukabi in Uganda? Everybody.
Almost
And what is a
everyone,
Muna
yes.
Mukabi? Yeah, what is a Muna Mukabi but people coming together,
Yeah.
making contributions to help each other, and then when something happens, the money comes and they're able to help their friends, their neighbors, their colleagues.
True.
In Ethiopia, you've got idirs, and the same thing is the case. People come together on a regular basis. They make a contribution. I'm intentionally not calling this a premium. They make a contribution to the Takaful pool. I mean, to the idir pool, and then it gets paid out when someone dies. And so my argument would be that people actually do understand the concept of Takaful, okay? They understand the concept. We have to leverage that. And I think and I say this for microinsurance too, because we've had a lot of issues here. We have to provide better products. I think we can't be too enamored with the fact that our product is Takaful, because Takaful is not the be all and end all for people. Yes, it should be Takaful, but that's not the primary focus. The primary focus has to be value. We did a study in Malaysia. And it was fascinating to me. The Malaysia Takaful Association asked us to get an understanding from people how important Takaful is for them if they're going to buy insurance that's Takaful based. Well, how important is it? And so what we did was we devised two products exactly the same. And we said, okay, this is Takaful, this is non-Takaful. And so which one would you buy? And so everybody says, Takaful. We want the Takaful product. Exactly the same products, okay? Now, we go back and we say, okay, listen, let's say the non-Takaful product, we add 10% to the coverage. 10%, it's just a little bit, right? What would you buy? Now, everybody wants the non-Takaful product. We made some other shifts and such, but this was the trend that we saw. When the product was better, they chose to go with non-Takaful. If it was better on the Takaful side, they chose to do that. But fundamentally, what they wanted was a Takaful product that gave them value. And that's where we have to focus more, is making sure we have value. Yes, it's important to be Takaful. And yes, the ethical principles of Sharia compliance are super important. And I think we have to focus more on that than we do on the good products more than we do on other things. I'll stop there now, Paul.
Thank you, Michael. Still from the different markets, practically and structurally, what is the single most important difference that fundamentally differentiates Takaful from conventional insurance beyond the inclusion of interest or riba? Let's start with Dr. Yusuf. Again.
Thank you, Paul. Basically, I always tell people that the key underlying principles of the Sharia part of it, where we talk about the uncertainty, where we talk about the riba, But if you really went ahead and you asked an ordinary person what practically distinguishes Takaful from conventional insurance, it is an example of the monomukari in Uganda. Literally, people have to sit down and understand the problem is my problem. Okay? That's why actually this arrangement, like I'm getting feedback, I don't know from who. True, they are existing, and the reason why they are thriving, the way they are thriving, is because people have trust in each other. It stands out when it comes to distinguishing Takaful from conventional insurance practically is the ability for the people involved, or I could technically call them the participants, to understand that here for risk sharing, because it's what sounds out loud in Takaful. Are we here for one another? Are we here to share these risks? And also, the other thing we can mention is about the ability to share the responsibility. Okay, shared responsibility, understanding to a minor extent. Now, this one specifically applies to the Muslims. Understanding that this kind of arrangement we are in is not against our faith or our belief. So these are the two single most issues that makes Takaful entirely distinct from conventional insurance, away from the technicalities of Garara and so on. Once you can convince someone that what you're getting involved in is Islamically acceptable, is ethically acceptable, and your people who are going to come together, you are going to share these risks together. I'm there for you and I'm here for you. And specifically, I should even mention this. I belong, where I stay, I belong to a certain group, 700 members on a particular WhatsApp group. And when someone passes on or loses a parent on that group, we continuously contribute Mabugo. But trust me, I don't know more than 20 people on the, and I've contributed Mabugo to those people I don't know, I've never met, and so on and so forth. But I know that at a certain point in time, if it ever happens to me, they will come through for me. So that ability to, so there is shared responsibility in case something happens. It's what entirely distinguishes Takaful in these markets than the conventional insurance. I submit my report.
Thank you, Dr. Mr. Gobi. Could you give your opinion of view about the practical and structural difference between Takaful and conventional insurance beyond the inclusion of riba or interest?
Okay, thank you very much. Takaful and the conventional insurance, when we see their differences, Takaful insurance is and conventional insurance are both are the risk mitigation. So, however, conventional insurance were used by many Islamic countries too before 1985. However, in 1985, the Muslim scholars has decided that this product, conventional insurance, is haram or unacceptable because it involves prohibited elements such as gambling, interest, and the Mysore or gambling, interest or riba, and the uncertainty. In its operation, the conventional insurance consists these elements. However, if we eliminate these elements from the conventional, it could be the Takaful insurance. By the way, Takaful insurance is a Sharia compliant product which can be sold for Muslim as well as non-Muslim. Everything can be insured under conventional insurance, but when we come to Takaful insurance, everything cannot be insured. It is very ethical. The investment or the businesses has to be Sharia compliant in accordance with the Sharia law. So it is a very ethical product when we see the Takaful insurance. Takaful insurance is a risk sharing among the pool members, whereas the conventional insurance is the customer transfer its risk to the insurer. So the risk that is with the customer will be transferred to the insurance company. In Takaful, that is not the way. The risk is shared among the pool members. So the Takaful insurance is based on different modalities. For instance, if we take Wakala model, which most of the insurers in our country adopted, the company is considered as the manager or the administrator of the fund, whereas the participants or the clients are considered as the owners of the fund. In Wakala model, companies or the operator is simply considered as the agent of the participants. It's not the owner of the fund. It's only paid for its services, which we call wakala fee or service fee. The company will take some part of in a fixed rate for its knowledge or its expertise. But the participants are the owners of the funds. In conventional insurance, we know if there is a profit, the profit goes to the companies, to the operator only, or the company. But in Takaful, the surplus will be, or the profit will be shared to among the participants according to the already agreed ratios. So there are many ways that we can see the differences of the Takaful and the conventional one.
Okay, thank you, Mr. Gobi, for your submission.
Yes,
May we have Michael's?
Okay. Did I get and set your points, Mr. Mufumba?
Okay, there was a question from Mr. Gobi. Paul?
Okay.
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 For me, the biggest difference between commercial insurance and Takaful is, as has been said, to some extent, is the issue of governance.
Mr. Gobi, thank you for your submission. Let's
Mr. Mike has a question, I think. Let's be finished.
Yep. Okay. So I think that the biggest difference is it's in governance and how these programs are governed. As was said by Dr. Yusuf and Mr. Gobi, you have the members owning the program. They hire an insurance company to take on the risk, or a Takaful company to take on the risk. They share the profits, they share the losses. And I think this is really important. And one of the things that should really be a benefit for Takaful companies and products, and in attracting other members. As was mentioned, Takaful is for Muslims and non-Muslims. And I don't know why a lot of non-Muslims wouldn't join Takaful. And in some places and some countries, you've got about a 50-50 balance in your Takaful programs of Muslim and non-Muslim. And that's because these are ethical products. Who doesn't want to do an ethical product? And so, and you potentially get dividends at the end of the year. You get the payment of the surplus of the premiums. And so, I think this is where the real key is. And yes, fundamentally, the structure follows Sharia compliance, but that just enhances the ethicality of the program. And so I think that's where the important differences are. The rest of it, in many cases, is just what happens behind the scenes. I even know there are many Takaful companies that on the front side, they look like Takaful. On the back side, they're making investments just like every other insurance company, and they're doing things just like other insurance companies. Part of this is regulatory requirements. So I think regulations in a number of countries still have to catch up. But yeah, anyway, I think governance is the big issue and opportunity.
Oh, thank you, Michael. Let me bring this to Mr. Gobi from Ethiopia and try to describe for us an environment in Ethiopia and how Takaful windows or companies are operating. First things first, what key commercial cultural factors have been the primary drivers of Takaful growth and acceptance in Ethiopia? Mr. Gobi.
Okay, thank you very much. As I have explained it in the earlier time, the flourishing or the establishment of the full-fledged banks, that means interest-free banking services in Ethiopia, triggers the opening of Takaful insurances in Ethiopia. Now we do have around 4 interest-free banking services in our country, and others microfinance as well. So the establishment of these banks triggers when they give the loan, they need insurance coverage. So they need interest-free insurance or Takaful. So there is one thing, one reason. The other reason is, as part of a financial inclusion, the government has allowed interest-free banking as well as Takaful insurance in the country. Now it's more than 5 years since they're established. Currently, they are working hand in hand. When banks want to give a loan to their customers, the customer will come and get the coverage for their assets collateral from the insurance companies or those who operating as Takaful window operations. That means the insurance companies in Ethiopia now they opened mainly around 10. They opened Takaful window operations side by side with the conventional one. There is no full-fledged insurance companies in the country. However, there is one of which is considered as Micro-Takaful is under establishment. So still now, all are operating as a window operating Takaful insurance. So these are the other points. And also people, the participants also demanding this product from time to time because most of them are not using the conventional one because of their religion. So they started to question, like a bank, they started to question to have Sharia compliant insurance in the country. So these are the reasons, triggers for the establishment or for the opening of Takaful in Ethiopia. Now, when we see at the start, as a starting point, the awareness of the people and the awareness of the insurance companies was low. Now it is now become better and better from time to time when we see it is growth and it is expansion. Earlier, there were a few of insurance companies were opened the window. Now it is expanding from time to time, as well as in banks too. Beside full-fledged banks, there are also other commercial banks, conventional banks also started to open the window service of interest-free banking service in Ethiopia. So these are the points as triggers for the operation of the couple in the country. So it is now in a good stage that we can say it's going on.
Okay. Now, from the drivers of Takaful growth, still I could like to know, or the members that are on this webinar would like to know which operational models are you using and which has which kind of model has worked for you best in terms of operation.
Okay, thank you. As Mr. Mike stated that there is a governance issue or problems in our country too. There is no decentralized Sharia Advisory Council, but it is a decentralized one. Each company, they do have their own Sharia Advisory Council. And also the international standard setters like IoT and an institution in Malaysia. There are some institutions that are not adopted by the National Bank of Ethiopia. Similarly, when we come to operational models, different countries follow different modalities. When we come to Ethiopia too, mainly Wakala and hybrid model are very known to the insurers. Most of the newcomers to this business using the Wakala model. However, two of the private insurance companies using hybrid or Wakala Mudaraba mixed model in their operations, starting from their beginning in the business of Takaful. So we can say that Wakala model is similar to agency. When we come to hybrid, there is what agency as well as investment options model. So most of Wakala, they are using Wakala model because of it is a very easy, simple to adapt and to operate by the insurance companies in the country. Yes, sir.
Okay, thank you for that. Still, you've talked about that you're using more of the Wakala and the hybrid model. What has that looked like in reality?
Okay. I think you are forwarding a question to me, I think. Yeah?
Yes, please.
Okay. Okay. Thank you very much again. When we take the Wakala model, for instance, the insurance corporation using this model, so it accepts the business as a wakil or an agent. So when the business comes to AIC is the fund manager, and the participants are considered as the owner of the funds. Around 35% of the contribution that is paid by the participant goes to the owner or the operator, that means Ethiopian Insurance Corporation. And the rest, 65%, is the Takaful participant fund, which is a risk fund that means. So AIC or the operator will use only 35% for its services, only 35% for its promotion, admin cost, and the like. And the 65% is used as in order to pay the claim related expenses will be taken out of this 65%. And when we see the hybrid model, it's mostly, it also includes the investments. There is a fund that is administered by the operator. That fund will be invested if there is a return. The operator as well as the participant will be shared this surplus according to the already agreed ratios between them. So this model is, you see, if there is an option of investment option in the country, it's very visible. As I have mentioned earlier, there is even Takaful is at its infant stage in the country. There is no as such the investment option in the country. So we prefer have Wakala to hybrid because of there is no as such investment option in the country. So if an insurance business, if there is an options to investment, this hybrid is very preferable because the company will get from Wakala fee as well as from investment return too. So these are the basic differences of the modality. Yes, sir.
Well, thank you, Gobi. Lastly, still about, you've talked about the realities of how the models are working, but still in these kind of models, there are specific products that have performed far very well. Can you highlight for us some of those products that have performed very well in 5 minutes?
Okay. Regarding the Kakafu policies that we are offering to the customers or to our participants, mainly are those motor Takaful policies, mainly third parties and fire and lightning Takaful policy as well. And also there is some engineering policies. Now we started recently. That means we get the approval in December 2025. Just a matter of few months we have started the operations, practical operations. So it's expanding. There is a demand from the customers just to provide other products too. But for time being, when the banks, for interest-free banks or window with a window or full-fledged requested insurance coverage for their assets, the participants come to our company and ask for some engineering as well as fire and lighting insurance companies. Fire and lighting policies, technical policies from us. So the product is not as much expanded, you can say it, because the potential participants will not have full information about how whether we have started Takaful beside the conventional one. Now they are awaiting and they are coming to our corporations. So I believe it will be expanded to other classes of business too in the future.
Okay, thank you so much, Mr. Gobi, for that. It has been very insightful. Let's bring in Dr. Yusuf to talk about the emerging market in Uganda. How does the new experience going to be like compared to what Mr. Gobi has talked about? Dr. Yusuf?
Thank you, Paul.
Dr. Yusuf, okay.
Yeah. Now, when we talk about how the new experience for Takaful is going to be like, one thing I would love to share is that most of these circles, trust me, there is excitement. That's the first thing I can say. There is excitement that the first player has come through, and this excitement is in different layers and with different peoples. For example, when you come to the Muslims, first of all, they were actually, I should also mention this, that I think it's now 3 years since Uganda also got its first Islamic banking institution. Now there was also excitement among Muslims for getting the first bank, and now that the Takaful has also come in, still excitement is coming through. Now, how are these people depicting? For instance, actually, to be specific with the current player, Tamin, which was licensed, they first launched around 3 products, and one of them is motor and property. Now, when these ones came through, first of all, motor is compulsory. When I speak about motor third party specifically, it's compulsory. So you realize it's going to be easier for them to attract that segment of the population which feels that perhaps they had reservation in, say, securing their cars comprehensively using conventional arrangements. So there is that excitement, okay? Now, this one is going to come through and they're like, now that we have this kind of arrangement, we can fully go on board. Then also, the other thing I can talk about is issue of transparency and trust. You know, one of the challenges which have been there has always been, sometimes I don't want to speak this one loud, but we have a history of people having issues in trusting the way insurance operates, because at a certain point, some of them had had their genuine claims not paid, given the history of how insurance businesses then used to behave before thorough regulations came in. But now with this, there is an excitement that at least this being an ethical kind of arrangement, there is trust coming through on perhaps how their funds will be invested, how their claims will be settled. And if really we see something being governed by a clear Sharia supervisory board, and now this is where the entire trust of Takaful comes in. For example, if I see a prominent clerical leader or a prominent sheikh being on the board of a particular arrangement, automatically I develop trust that this being a religious leader who is conversant with the rulings and then the teachings of a particular faith, definitely I can trust whatever product this person is governing or is seconding. Then also there is excitement about inclusivity. Despite the fact that the product, sometimes I have questioned this and so on, and I have challenges calling Takaful Islamic insurance. I'm one person who thought that maybe perhaps it would have had another name. So there is excitement among the non-Muslim population. And on every 2-3 people you meet and we are talking about this particular topic, they normally ask you, is this thing purely for Muslims? And the moment you mention that it's not, even non-Muslims are called on to join. The next question was like, okay, tell us, how does it operate? And then how is it different from other forms of arrangements? So the bottom line is that the Takaful experience in Uganda will feel less by buying a product, but it will fill in that particular gap given the cooperative arrangement on which it operates. So for individuals and then businesses and then the entire community at large, depending on how the key operators are going to tackle the different segments, there is excitement, and they should ride on that excitement by telling them how the cooperative nature of this is going to benefit them. That's what I can say on that.
Still with you, Dr. Yusuf. You've talked about the issue of non-Muslims seeing Takaful as for Muslims. Do you think it's one of the biggest barriers of introducing Takaful in Uganda today?
Oh, one thing I can say about this is I wouldn't look at it as a barrier. And actually, it should not even be from that angle. There are kind of a number of challenges these companies are going to face. For instance, there's a section of Muslims who do not even believe in risk mitigation entirely and the concept of Takaful entirely. I can share with you, there is a particular time I engaged with one of the sheikhs. He was preaching, and the way he was talking about Takaful, I listened to him. After talking, I got a one-on-one with him, and I told him that this kind of arrangement, all this Takaful you talked about, I don't believe it's what you people study in the madrasas. Okay, it's way beyond this. And I told him, I'm sorry to mention this, but I didn't feel you were in the right position to even talk about it, because you are not grounded in commercial law. So there has been a challenge of that specific bad mouthing by a section of people who do not even know how it entirely operates, especially when some, let me say, religious leaders do not believe in the arrangement, do not entirely understand the arrangement. Somehow they do some bad mouthing, so it needs them to really understand how it works. Then when it comes to non-Muslims, obviously there is that particular challenge. When you mention the word Islamic insurance, Islamic finance, automatically the word Islamic makes an ordinary person feel that this is purely for Muslims. Okay. However, when you sit down with these people and you entirely explain to them, they come to appreciate and they make to understand how this cooperative nature of arrangement works. and somehow they buy in. However, outrightly from the face validity, if someone does not give you attention to explain to him, the moment he sees Islamic, he feels that this is an arrangement which is purely for Muslims, and that could somehow affect the penetration. So to the different companies which are starting up the different windows, and to the one which has already started, it's up to him to design products which are entirely inclusive, and he tries as much as possible to minimize the component of skewing the products towards a particular region, such that it's seen as a wholesome product that fits all members of different denominations. That was I can submit there.
Thank you, Doctor. Still on the regulatory angle, do you think we are prepared as a country or as an industry to have Takaful in our environment for its growth?
Now, when we talk about regulatory alignment, one thing I can tell you, it has been a journey. You know where we started from the Financial Institutions Amendment Act, which came in 2016. You remember Parliament passing, I think it was the Financial Institutions Act in 2023. And then when the game changer came in and the regulator issued the Takaful guidelines, I think it was in October 2025. So when it comes to regulations, we are entirely grounded. The laws are supportive of entire inclusive finance, and I see the coming in of the Insurance Regulatory Authority doing its due diligence. And I think even the courts of law, I'm proud to tell you that there is a particular session I had with lawyers, and this one was about teaching them how this Takaful works. So you realize even the legal arm is coming in to understand how the whole notion of Takaful works. So from the regulatory perspective, the guidelines are in place, the laws are in place, and I think there we are doing good. However, what I can talk about is how do we trickle down this framework to the ordinary person to understand, okay? Then what I've not yet understood is how best these laws relate to issues. You know, insurance relates to issues like consumer protections, and then issues relating to window provisions and so on. These are important. So how are we going to extend perhaps the existing laws to specifically focus on consumer protection? This is extremely very, very important. But as we stand now, I think the legal framework is in place that can support and gives a baseline for Takaful to thrive.
Okay. Now, if we look back from what we've had from Mr. Gobi, what lessons do you think are most relevant for Uganda as entrant in the Takaful market?
Basically, what I've been advising people to do, especially different insurance companies, I got a chance to speak at a certain iftar dinner for one of the main insurers in the country. And I told them that they may not go in wholeheartedly because the operational rigidities which are still existing, among them is having a Sharia supervisory board. It might be hard for them to set up a specific Sharia supervisory board. So they can start with the window, and somehow, somewhere, they can go ahead and, source these boards. The regulation allows that. They can source part of these boards from neighboring countries. They can source some of people on the managerial team and those key sections from neighboring countries, because we have it in Kenya, we have it now in Djibouti, we have it in Ethiopia. These ones can be learning points to help us know how to push forward. Otherwise, there is no way we can go in wholeheartedly without learning from the markets where it has all been implemented. Okay. So I'm back to you. Yes, but can you hear me? Paul, have we lost you?
I think connection problem.
Okay. All right.
A question,
Yes,
Dr.
Michael.
Yusuf, thank you. Thank you. I'll just ask a question in the absence of Paul while Paul figures out his stuff.
Yes.
But a question that I have for both you, Dr. Yusuf, and Mr. Gubi, how do we massify Takaful? You've got in Uganda, for example, you've got a population of Muslims that's probably at least 6 or 7 million people, maybe more.
Yes.
And at the same time, we've all mentioned that that Takaful isn't just a Muslim product. So we have a huge market here. What kinds of things do you think it's going to take to get to that kind of a massive scale?
What I can say, Mike, about that, and I've always mentioned it to people, some of the reasons why insurance is having a challenge is to penetrate in this market. I always call it the quality of the population. We all know, for instance, insurance is at the bottom tail of people's basic needs. Someone who is not even willing to pay premiums, and he hasn't even paid school fees for children, he has gotten something. So the issue is, can we design those specific products where people can afford to pay premiums? For example, including these people does not take too much. You can design a product where an individual can part with, let's say, $2 a day or $2 a week. Okay, and when you aggregate that, you may realize that he's paying for this particular policy, and it's aggregating to something like maybe $250 a year. So when if you can come up and then you have these specific payment modes which are flexible, the products are affordable, because at the end of the day, these people do not want to get rich from insurance. They are not even rich. The essence is, are we protecting them? I'll give you an example. If there is a particular farmer who has gone out there and bought seeds for 500,000, for instance, and he has planted his garden, and then after a month, hailstorms come and they destroy the whole garden. So if there is a particular insurance product which is going to come through, let's assume it's ethical, it's Takaful, for instance, because perhaps he has reservations. And the essence of this product is not to make the farmer lose his initial seed capital of 500 he used to buy fertilizers and the seeds. So instead of him selling his cow or goats to buy these new fertilizers and the goats, you come through as insurance and like, okay, you remember the other car premium you paid of 50,000. Now that this particular thing has happened, we are going to buy for you the seeds. How much does it take you to buy the seeds? You're like, okay, I'd agreed 500. You pay this guy the 500,000. He buys the seeds, he plants for the next season. Rather than him selling his cow or his goats to again, this is where insurance comes in to help these people. So the essence is, can we design those specific products? Because on top of people being many, the truth is that the quality of the population is not that good. And by quality, I mean their incomes are not that good. How are you going to convince this particular lady in the market who is working to get 10,000 a day? And when I convert that to dollars, 10,000 is something like $2.5 a day. That one does not, he can't even afford the insurance. And that is the majority of the people we are talking about. So when you're mentioning about including them, inclusivity, making them buy this product, the easiest way for insurance to penetrate or to have that mass enrollment is making sure that first, we design products that appeal to people. Two, we design products that offer value to people. And again, we make it easier for them to understand and on board. There we shall help to include all these people. That's what I can say for now, Mike, on that.
Yeah, no, absolutely. Absolutely, Dr. Yusuf. We say in microinsurance, and it's completely relevant to Takaful, but we say that good Micro-Takaful microinsurance has to be suave. It has to be simple, just like you were saying. It has to be understood. People have to know what they're buying, and they have to trust that what they're buying is going to actually pay them and keep them from selling off their animals, like you said. It has to be accessible. How do you not just pay the contributions, but how do you get the claims right away? Because in the example you gave, right, if you have a problem with the growth period when the seeds are supposed to be germinating, you want to get people money right away so they can buy new seeds and start again. And so those kind of process issues make it accessible. It has to be valuable, and we can't have valuable products without talking to people. And I can see somebody in here was talking in the messages, was talking about talking to the farmers and the villagers, and absolutely, this is what we need to do, and working through their groups. So, you know, you're exactly correct. And then the final piece is efficiency. We have to be efficient, and we have to keep costs down, because yes, if even low-income people have a range in which they will pay. If they see lots of value, if they understand the product, if it's simple, then they'll pay a little more because they know they're going to get something back. If they don't trust a product, they're not going to want to buy it at all. It's that no price can you sell it to them. But so they have this range. We have to do better at making sure that we're responding to their needs, just like you were saying, products that appeal to the market and actually add value. Okay, Paul, I just thank you, Dr. Yusuf.
No.
And Paul, I just took over a little bit in the gap, and welcome back. So I'll relinquish.
Thank you. It was network. Now, let's be open. Let's open this up for a broader discussion. Michael, what could you say are the biggest misconceptions about Takaful across Africa?
That it's just the most important thing about it is that it's Takaful, that it's Sharia compliant. I think that's the biggest issue. Yes, it has to be Sharia compliant, but again, that has to be secondary. There have to be good products, and the providers, in too many cases, literally, I mean, I see them in too many cases. They the providers don't recognize that, and they're happy if it's Takaful, and so they expect everyone to buy it, and that's not the way it works. The biggest misconception comes from the insurers, I think, and it's that issue. And you know, we say people don't wake up in the morning. My good friend Richard Leftley always says people don't wake up in the morning thinking about insurance, and no, they don't. But whether they're Muslim or Christian or whatever, they wake up thinking about risk. And if we can respond to that better, that's going to help. And that's going to help to massify. It's going to help to take down those barriers. And so I really think that's the biggest misconception.
Okay. Now, still, Michael, can Takaful truly succeed in non-Muslim majority markets purely on its value proportion?
I have no doubt that it can, and I think that there are a number of places where there are examples where it does. And again, if we're focused on the value proposition for clients, then you're going to get Muslims and non-Muslims. And like we said, I think while you were fixing the network issues, we said, you know, in Uganda, there's probably 6 million or so Muslims, plus you've got, let's say, at least that many non-Muslims who would purchase insurance. That's a market that can get you to scale. And so there's no reason why a minority Muslim population can't make Takaful a very, very popular, very successful kind of program. All the things, the fundamentals of Takaful are there to make these products more interesting and more appropriate to low-income people, especially. That's my focus, of course. But to people, it's the fundamentals are there. We just have to apply them better.
Okay. Mr. Gobi, since Ethiopia is not only an Islam country, but there are also other religions, and these people we think they can benefit more from Takaful. Are we positioning Takaful correctly as a religious product or as an ethical financial inclusion?
Thank you, Mr. Mfumba. Welcome back. Uh, you see, there is a misconception, of course, in our country too. This product is not only for the Muslim, it's also for non-Muslim. It's intended to include those who are away from the insurance. So the way we communicate people, the way we promote this product can attract or can push the people from using this product. So it is a business product. It's not a religious product. It has to be understood by all as a business product. But Sharia compliant product or ethical product is also this product, the couple can be sold for Muslim as well as non-Muslim. There is no barriers. However, the way the operators communicate their potential customer matters. For instance, I have get some information from somebody yes, in Africa when they propagate or promote the product, they use in their pamphlet as a religious product. There is, you see, Kaaba and more masjids on the pamphlets, and people who are not Muslim consider this is not for non-Muslim. It's only for Muslims, they say. Yes, it is happened in Africa, some country in Africa. But in other country like Malaysia, most of the users of this product is non-Muslim, non-Muslims that are living in Malaysia. The way the insurance companies in that country promote the product is as a product only. That means it is a product that is suitable for anybody, but ethical product. And also they attach the value proposition or the benefits they can have when they buy a couple. So non-Muslim also come to buy these products too. So in Ethiopia, when we come to Ethiopia, Ethiopia is both Muslim as well as Christians and others followers are presented in this country. So we are promoting this product not as a religious product, but as a business product. So we are at initial stage. We are doing these things in our using mass medias, printing medias, and social medias nowadays as a product. Just please visit us, and we do have this Sharia compliant product for you that matches with your needs and wants. That is the way we are communicating with the customers, the potential customers, and even not only for Muslim but others too. For Muslim, particularly, we approach them as because they are away from us. We don't provide the Sharia compliant product in previous time. Now they are returning back to us because if we develop a trust with the participants, our business can easily expand. So we are doing these things nowadays. So I hope we reach every corner of the country since this insurance company is a state-owned company. So we can reach our potential participants all over the country. Thank you.
Thank you so much, Mr. Gobi. Now, let's widen the lens a bit and look at this from a global perspective. I would like to bring in insights from Michael and especially focusing on Micro-Takaful. Michael, what models have actually worked in improving financial inclusion?
Thank you, Paul. In terms of Takaful and Micro-Takaful, we've seen two options that that tend to be somewhat successful, and we've spoken about them already. The Wakala method is what we see a lot, and for reasons that I think both Mr. Gobi and Dr. Yusuf were mentioning about the ease of these. I think where we need to look is actually widening even beyond this and thinking about where does access to low-income people to risk management tools, where do we see some real successes there, and what brings those about? And so, if we look at some of these, other countries in the region, you look at a country like Nigeria, which has huge population, but very low penetration, whether it's Takaful or microinsurance. We don't see a lot of penetration there, and a lot of the issue is the history of insurance and what people have seen. They don't trust insurance, even more so than other places. They don't trust it, and the insurers have not done a very good job at helping people to trust and to believe that insurance is something that can work. Insurance, Takaful. I think there's still a lot of testing. I think overall, Takaful itself has been an industry that has been in evolution. We've referenced that a couple times throughout this discussion, but is in evolution. And then Micro-Takaful is yet another evolution that this all faces. And I think in general, Micro-Takaful has been behind the movements towards Takaful. Yet at the same time, I think Micro-Takaful fits better with these markets than certainly commercial microinsurance, because you have a better understanding of your market. You have membership that is governing the institution. You have a better way of, you have a formal moral reason for making sure that what you've got are products of value for people that they really do benefit from. And so I think, these kinds of things are things that we have seen big improvements on. I think I've seen a number of places with Takaful windows, and I know that these are not always considered to be optimal. Yet for me, when you've got your Sharia committee and the oversights, I think you can control that within the institution. And at the same time, one of the issues we have is when we set up a separate Takaful organization, then we've got all overheads and other costs that have to be paid out through the surpluses of these entities. If you do this as a window, I think then some of those costs can be shared. The cost of your IT systems, the cost of your overall management. I think some of these can be shared with the broader structure from which you're emanating this window. I think those things are important for us to be thinking about, and how we can leverage those and keep the costs down for Micro-Takaful. And so I kind of like the window approach. And I think this can be helpful. We see this in a number of places. And yeah, I think this is among the areas in which we have improvements. I think, you know, one of the other things we briefly touched upon, regulations and such earlier. And I do want to say that in most countries, most jurisdictions, there is a strong incentive on the part of insurance Takaful regulators to get insurance out there, to get risk management tools out there for people. And I think this really greatly benefits us. And I think we've heard examples both in Ethiopia and my good friend Ato Belay in the insurance regulator. I know he's been very open, and the folks at the IRA in Uganda have been very open in trying to get this to work. Certainly Egypt and other places too. One of the issues in Nigeria is regulation and the issues around regulation there. And so, you know, I think the regulations, when the regulator follows this incentive and wants to have expansion of risk management, good risk management, then they fall behind and they help to guide and push and such, and they don't restrict. So I think that's a good opportunity that we all have. We also have a lot of distribution, which is critically important. If we don't get distribution to get it out there, the Takaful organizations themselves can help do that. They also have a number of their own organizations and entities through which they can work. But one of the key things that we're missing, like I said before, is the information about clients and understanding our members, understanding what the members really need. And so, you know, I think this is a place where we can improve. But I think the foundation is there. We just have to recognize it. We have to pull things together better.
Thank you, Michael. It has been interesting. And furthermore, can you share a practical example from another market? What are the key success factors in scaling Micro-Takaful in low-income markets? For example, if Takaful has started in Uganda and we want it to be down to the Mundua 1C, how can we scale it up?
I think Malaysia is a good example. Mr. Gobi has mentioned Malaysia a couple times. And I think it's a good example, and it's an improving example. They came to us, for example, and they said, we want to know what good products are here. And we want to know, you know, why people would choose Takaful and versus non-Takaful, right? And so they wanted to know that information. The association did this. They funded this activity. And then when we came out with products, we had a whole report looking at, you know, not just what people want, but then looking at market segmentation. What do different groups want? Then we had meetings with each of the different insurance companies to help them to then take that and implement those things. And what you've seen is really an expansion of products in Malaysia, which are much more responsive to clients. And I think this has really created, I don't want to say a renaissance of Takaful in Malaysia, but certainly you've gotten a new way of looking at Takaful. We even did a product on, one of the partners followed up, and they did a product on mental health. They said there's a lot of issues with mental health in the low income markets here. And they even started a product that included mental health. And so, you know, there's almost an infinite array of things that we can do in insurance, and where we see people start to insurance Takaful organizations start to think about these points, then I think we see much more success. And we need to take some of those examples, like in Malaysia. And there are particular companies there that are very open, that have done some very interesting things. And so I think that's positive. I think for a while, Allianz in Indonesia was having some good success at scaling. They did this through a window. And I think there was a lot of positive aspects there, and they were also somewhat open, looking at a variety of products that people need. And so these kinds of approaches can be very positive, and there are some positive examples in these countries.
Still about Takaful, Micro-Takaful, do you see mobile and digital channels playing a key role in scaling Micro-Takaful or Takaful as a journal?
Yeah, I can't speak to the Sharia legality, if you will, of these, but I can say that what's needed is to get better ways of providing access to people, and it certainly seems to me that Muslims use their phones at least as much as anybody else. And when you look at countries with really expansive technology, look at Kenya with M-Pesa and such, it just completely opens up the world of what you can do, how you can access your clients, how you can do that efficiently, how you can service them. You know, because of these kinds of technologies, you've got claims being paid within hours, let's say, and you've got better servicing for people, and these things are really the next phase of Micro-Takaful, microinsurance. And so, yeah, and I've been around just recently. I've been around talking to people who are in the insurtech space and looking at ways in which we can leverage technology for these markets. So, so yeah, this is a game changer as we move forward.
Michael, still again, how applicable are these global models in relations to Ethiopia and Uganda and the rest of Africa?
One of the things that I've learned over the years is that we can't simply replicate lessons from other places. But what's important is that we can take those lessons and we can see how they might apply in our different markets. Each market is different. Indeed, we did a study recently, which included Takaful, but was broader, looking at gender issues in microinsurance in Kenya. And, you know, Kenya has a very diverse population. We broke it into 6 different communities, traditional communities, and we got very significantly different results in each of those communities. So yes, we take kind of the foundational structure we can take from other places, we can tweak to apply to Uganda, to Ethiopia, to Egypt, to any of these countries. And I generally say, you know, the numbers, whatever, but generally I'll say that, you know, you can do basically an 80% replication, but that 20% has got to respond to those individual markets. And so, yeah, I think there's a lot of stuff that we can learn. I think that we still have to understand the specific markets that we're looking at. And we are starting to see more and more of this segmentation that I mentioned before, rather than just low-income people, but rather than just low-income people, we have you know, low-income single mothers. We have low-income boda drivers in Uganda. We have, you know, these groups, and they have different products too. So the more we can have specific opportunities for folks, the more we can have success. And these lessons that we've learned and that should be promoted more and more from these other countries, these are helpful for us in recognizing and not just, okay, this company did this and it failed, but this company did this and it wasn't successful, and they made these adjustments and that made it successful. Those kinds of things are really, really important lessons. What was the journey that the Takaful organization went through? That's what's really important. Is let's look at those pieces. And even when I go to conferences, oftentimes I hear the, oh yeah, we got this great thing, and we're doing super. And I've been around a lot. I know a lot of these programs, and I know you're not really doing super. What were your problems? How did you fix them? That's what people need to understand. That's what's helpful for people. So, thank you.
Thank you, Michael. Now, before we go further to some other questions, I could like the participants or the people that have joined on board, feel free to raise up your hand, and if you have a question or you need a clarification, we can give you a chance to do that. But when I look in the chat, there are some questions as we wait for them to get a chance to bring their questions. Taisi asked, I think he was asking Dr. Yusuf, what does Takaful bring on board different from the current conventional insurance companies?
Paul, can I answer him?
Sorry?
Can I answer him, or you're still reading?
I think let me read as you answer, then we read another one like that.
What I can answer, what does Takaful bring on board compared to conventional insurance? I think Trace is trying to look out for the key distinctions between conventional insurance and Takaful. What I can mention here is that for Takaful, it is ethical finance, like it has been adopted. Now, the genesis of insurance relates to risk transfer. There is a particular insurance company, you have a problem, pay them a premium, you transfer the problem to them. When the problem happens, they will pay you. But now with the way Takaful is structured, it's mutual risk sharing. It's the Muno Mukabi Michael mentioned. We are in this together, we share the problems together. Now that's where the issue of ethical comes in. And also, the other distinct difference is Muslims by nature, they have reservations with a number of covenants within conventional insurance. For example, they feel conventional insurance has interest-bearing arrangements, which they feel is considered to be unacceptable in Islam. They feel it has an element of gambling, excessive uncertainty. So when they are structuring Takaful contracts, they structure them in Sharia-compliant arrangements, which are entirely free from the gambling assumed in conventional, the interest-bearing arrangements are not there, and even excessive uncertainty. Now, in terms of value addition, one thing I can say is, first of all, Takaful is seen as us, not them. We are here, we are sharing this together, okay? It brings back the other essence of ethical arrangement, people coming together, sharing a societal problem, and then solving it amongst themselves. But other arrangements, they're entirely the same way it is in conventional. When they are products, there will be top-ups on the products, there will be investment products, and the rest. However, the overall arrangement I can say is that for Takaful, it's mutual risk sharing. Yet conventional insurance, it's transferring the risks to the insurer. Michael? Paul, I'm back to you.
Okay. Another question is still from Taisi. In comparison to the conventional insurance organization, as part of the penetration model, how much of the current Uganda uninsured market is due to lack of Sharia compliant options to be able to to be integrated, something like that? Still, Dr. Yusuf.
Yes, I think what Taisia here is trying to show is that, okay, if we onboarded Takaful, how best can it help in the market penetration and, brings, currently as we speak, according to the Uganda Bureau of Statistics, we have close to 7 million Muslims. And if you look out for Muslims who insure, people who sell these policies will tell you, "Oh, you are in this game." If you found another Muslim, he will tell you that I'm not insuring because I'm a Muslim. I'm not doing this because I'm a Muslim. Now, if we bring in this Sharia compliant kind of arrangement, where Muslims feel that it is an insurance arrangement which caters for their Islamic values, definitely the numbers might not be that much. But if from the 7 million, you can first capture 1 million in the next 3 to 5 years, that's an addition to the inclusivity and then the penetration rate. So the essence is we cannot quantify the numbers right now, okay? But the issue is in the few coming years, those people who are hiding under the pretext that my religion does not allow me to take on insurance, we have a product which is Muslim inclusive or which is religious inclusive right now. So you have no excuse apart from anything else to also be included. So the numbers might not be easy to quantify, but as we speak, as we proceed like this, we should be in position to also bring those on board. That's what I can say on that one.
Okay. Stacy is still pointing at you, Dr. Yusuf. Dr. Yusuf, issue is not understanding, but rather demoralizing the new entrants as the already existing providers play a fundamental role to fight new entrants into the market, yet the new providers would be of value to the end user.
I think we have a history of insurance in Uganda from the early, I would say during Amini's regime, and then we came through to the turbulent times of the 80s and so on. Insurance has had its own bad run. But now the regulator is there. I always jump back to the regulator. He has struggled much to bring sanity in the market. I know there is competition, but right now we have what we call sane competition. People are competing, but they are competing within their area. Right now we don't have issues of undercutting. Okay. As we speak right now, we have the cash and car arrangements. So all those arrangements are in the market to make sure that even if people are competing, they are competing in an ethical way or in an acceptable way. So if you come to this market as we speak right now, the rules, the guidelines, and so on, they are protecting you. I know it might be about the financial muscle, which strategy you are penetrating the market with, and so on. But at the end of the day, the market is leveled. Health competition, and then I don't even think outrightly that the new entrants can be thrown out by the old entrants. And also, the other thing I can finalize with in regard to that is the fact that the regulator and all other players now they have become cautious and they are fighting all those bad vices which existed then, which could affect the end user in regard to not paying genuine claims and so on and so forth. So there is something in this market. Thank you.
Thank you so much, Doctor, for those responses. I think there is no other question. Back to you, Michael. Is Micro-Takaful the real gateway to the insurance penetration in Africa? Specifically looking at Uganda, Ethiopia?
Couple things. Um, excuse me. We talk about penetration as being kind of the key. And I think that we're a bit misguided in that. Me too. Because the calculation for penetration is premiums over GDP. And when we're talking about Takaful products, Micro-Takaful products, you're not talking about big premiums. Until you get to millions of clients, literally, you're not going to move penetration. What's important is that you get more people that are covered with risk management tools so they don't have to sell their animals like Dr. Yusuf was talking about before, so that they have a means of being resilient. So I think we have to look at this question in a bit of a different way. And I mean that on a regulatory basis, on a global basis. You know, the more people we cover, the more resilience we have. And the more people we have, yes, we have more premiums, but that's not going to move the needle until we get to real big scale. So I think that's important. And I think, you know, I honestly think that we're sitting potentially in the seat of a rocket ship. And if we can get these things together, if we can get some of this stuff done, then yeah, we can get this thing to take off. We can get big scale. We can get of those 7 million Muslims in Uganda and maybe 7 million others that would participate in Takaful. Also, you know, even if you just get 10% of that, that's 1.4 million people. And Dr. Yusuf said over the next 3 years that might be possible, and I think it is. But we have to have good products. We have to show people that that they are getting what we've promised. And I think Takaful is the perfect vehicle for that. The perfect vehicle, because it's not premiums that we're paying, it's contributions. We're helping our colleagues, our friends, our neighbors. And this is embedded in the cultures that you see now in Uganda and in other countries. And we just have to put the pieces together right. And I think we're there. We're on the edge of taking off. We just have to do this right.
Okay, thank you, Michael. As we begin to wrap up, I would like to ask each one of you one final question. Let's begin with Mr. Gobi. What is the one key action stakeholders must take to accelerate the growth of Takaful, especially in Ethiopia?
Thank you very much, Mr. Paul. Yeah, the couple insurance has to support it with the different stakeholders to be grow. There is a legal framework in place. The Parliament has approved proclamation. The regulatory body, National Bank, has issued directives. This directive has to enhance or support the operations of the Takaful in the country. And also should be the options for the investment options for the Takaful. As we know, there is only the conventional insurance investment options, but there should be investment option also for conventional insurance too. Other point is there are challenges you see in the country. There is a lack of awareness, in lack of HR or expertise in the CAFU, and also there are advisory council members. We are not in fully just educated in the area of Takaful. So these shortages, these challenges has to be resolved. And also as a new product in the country, there is appropriate product design has to be in place, and also the retail capacity has to be developed, and the retail companies also work hand in hand with the couple operators too. So a couple will, as just we refer from different literatures, it is growing from time to time, greater than the conventional one in the world. So this has to brought to the country. The obstacles has to be cleared for the development of the couple in Ethiopia. So now there are positive starting in the country. This has to be expanded in different stakeholders in the country. So the directive has to be revised too in accordance with the international standards stated, and also it has to consider these investment options too. Thank you, Mr. Paul. Yes, I would like to add this point, Anneli.
Thank you very much, Mr. Gobi. Let's have the opinion of Dr. Yusuf.
Paul, come again with the question.
What is that one key action stakeholders must take to accelerate the growth of Takaful in Uganda?
Thank you. To me, the key factor relies in two major things. One is to design simple and value-adding products, as basic as that. If people see value in these products, and if they are simple products, leave the jargons, leave the gymnastics, make it as simple as possible, such that I can explain it to someone in a line or in 2 sentences, and he can really tell that when I put my money here, this is what I'm going to get. That one will drive penetration. Then the second one, which is equally important, is we should not assume these people know us and they know this product. We should somehow move away from what we call insurance awareness to insurance literacy. You know, people have been made aware of insurance for a number of years, but they are not literate. They are just aware it exists, but they are not literate. So it comes hard. You know, there are some specific products you can only buy if you know how they are going to help you. So if we have means in place of making sure that all the key stakeholders can, make people insurance literate. And to the different agents I've talked to, I always tell them the thing that the best way to sell insurance is to teach it to the person you are selling to. If you can really educate the person what the product is, which value it's going to add, definitely you'll close that person. So to the key stakeholders, the key things is make sure you design products that are simple and they are value-adding products. And then the second, make sure that we convince people by teaching them what insurance is all about, rather than saying awareness campaigns. Let's move away from insurance awareness to full insurance literacy. Those are my 2 assumptions, which I feel can work. Thank you.
Thank you so much, Dr. Yusuf. Michael, what is that one key action stakeholders must take to accelerate the growth of Takaful in Africa?
Thank you, Paul. The one key thing that needs to happen is we have to understand what our clients want, what our members want, and to talk to them and get an understanding from them about what their risks are, how they face those risks, and where the gaps are. That's what we can fill in. And Takaful has a perfect opportunity to be there and to be able to do those. We need more information. In Ethiopia, for example, if you look, the World Bank published a paper that we wrote looking at demand for risk management throughout Ethiopia. And so that kind of gives a good idea of what people were thinking. Now, insurers and Takaful providers would have to go deeper. But there are those kinds of pieces out there. There need to be more. We need to understand what our clients, what our members need. And without that, we're not going to reach scale. We're not going to reach real substantive numbers. And then ultimately we have to take that information and shift that into simple value-adding products. We talked about SWAV, simple, understood, accessible, valuable, efficient. We can take that information from clients and turn that into products that can be successful. And that's really the key. Understand your clients too. That's the first step.
Thank you, Michael. Thank you, Mr. Gobi. Thank you, Dr. Yusuf. That's been very insightful. So my takeaway keys on this is there is need of innovation, awareness, designing micro products that suit client needs, and also what we need to do as markets is to design or establish Sharia boards that are really the central regulation of all the Takaful operations. Therefore, on that note, I would like to thank all our panelists and our audience for being part of this important conversation. This has been the Insurance Focus webinar series. Thank you, and we look forward to continue this dialogue. Kindly note that we are going to post this on our YouTube page. It's called the Insurance Focus Podcast. It's on YouTube and all the different platforms, LinkedIn, and yeah, so that the conversation can only stop here, but it continues. Thank you so much, Michael, Dr. Yusuf, Mr. Gobi, for your time. It was on short notice, but you managed to be here, and the series was wonderful. Unless you have your last remarks, thank you so much.
Thank you, Paul. It was nice having you. And thank you, Michael. Nice meeting you in person. And Mr. Gobi, plus all the participants, I wish you the best. We shall keep interacting at different forums. I wish you all the best.
Thank you, all the participants. Thank you, Mr. Paul and Mr. Mike. Yes, we share a lot of things from you. And please keep in touch. A nice presentation, nice discussion, I think. It is for the first time, just I have communicated with a person from Uganda. But I do have different friends from there. I'm very happy by participating in this event. Thank you very much indeed.
It's a pleasure. Michael.
Thank you so much, Mr. Gobi, Dr. Yusuf, Paul, thank you for inviting me. And thank you all for hanging on for 2 hours and a little bit. Thank you very much. This was a great opportunity. And again, I think that there is tremendous potential in Takaful. And I think that we have a big role. So looking forward to seeing much more progress. Thank you.
It's a pleasure. Have a good afternoon.
Thank you.
Bye-bye, everyone.
Bye.